Hello and welcome to Crypto Weeklies. My name is Josh and today we cover Bitcoin and the recent surge in the bullish sentiment. None of the content financial advice. Right now the price of Bitcoin is close to 73k and you can see this is my website homepage of cryptoweeklies.com. Link on the bottom of your screen. This is the widget on the top left covers the term frequencies of crypto related content on YouTube and Twitter or X. The term frequencies of these crypto specific narratives highlight that the size of the bullish narratives has overpowered now the bearish narratives over the last 7 days. That's why Bitcoin and the bullish related narrative are garnering significant attention. As a corollary to that, or as a effect of this sudden rise of the price action, as well as sudden rise in the social sentiment, positive social sentiment with respect to Bitcoin and crypto, the composite risk model, which covers almost all of our risk-based, individual risk-based models, and try to create a composite risk score between 0 and 1, where anything below 0.3 risk in bear market is typically in accumulation zone. Right now Bitcoin has left that accumulation zone. Now the Bitcoin accumulation risk in this bear market is higher than 0.3. This is again a composite model. This model weights for this model is almost 1/4 is regression based price deviation, time weighted average price based deviation, simple moving average price based deviation, drawdown from all time high, volatility, beta, and Sharpe ratio. These are all individual models that feed their individual data into this aggregated composite risk model. We'll look why Bitcoin right now is not in that accumulation zone, and when it could potentially come into that territory. Again, not financial advice. First, we'll do a brief technical analysis right now, where how can price action, what can the price action do in the near future with respect to the past cycles. What you can see over here is this yellow line, which is the support level in the halving or the post halving year rally, that is in 2021 or in 2025, typically becomes a resistance level in the bear market year, like it did back in June 2022, and now first in March rally in 2026, and now potentially again in late April 2026 as well as that. And these two lines that you see over here, this I zoom it a little bit. This red line is the 20-week simple moving average, and the green line 21-week exponential moving average. They are also coming at that yellow line over here in April, and that valuation for Bitcoin at that level is somewhere close to $77,000. So roughly speaking, four and a half thousand higher than the current price. That's where the short-term resistance level exists. I am not saying that the price cannot go higher than this level, but if it does that, if the price action rallies beyond the yellow line or the red yellow flat line or the red 20 week simple moving average line, that rally could likely be somewhere similar to if that happens, could be similar to what happened in April 2022, where there was one fake out over here and then the price came crashing down yet another time, like it did in late March 2022 till about early April 2022. Now 4 years later, we are in early to mid April 2026. So that's a possibility, and if that kind of pans out, the next support level for Bitcoin is closer to 54k, which was the support level in the halving year, the year preceding the 2025 rally. The level at that 54k level, that's where Bitcoin found support. So going back to our own website, identify what needs to happen again using data and regression based model for Bitcoin to come into the accumulation zone. This model that you see, the diminished decay regression based model, this line, the white line that is drawn, is mathematically driven using Bitcoin's price action since 2014. So 12 years worth of data to identify what is the mathematically drawn fair value using polynomial regression based non-linear interpretation of fair value. Whenever the price is above this white line, it's typically the price is in the rally mode, like it was in the post halving year of 2017 till about 2018. And below this white line is the accumulation territory. Typically, accumulation below the white line, not the worst idea. This model says that the fair value for Bitcoin is at around 78k. So strictly speaking, price is in an accumulation territory. But what is typically a high value accumulation zone is if you draw a one standard deviation residual to the downside, and this residual, the thickness of this residual is diminishing as the volatility of Bitcoin is going down with time compared to historical volatility. It makes sense that if the rallies to the upside are muted, then the rallies or the crashes to the downside would also be muted. This is again, for example, over here you could, if I get rid of this green line for a moment, you can see the thickness between the white and the orange line back in 2015 was much higher than what it is now in 2026. So coming back to what needs to happen for Bitcoin to be in an accumulation territory, like it was in later half of 2022, as also in later December 2018 and in around March to about May 2020. So this level for Bitcoin, for Bitcoin to be in that accumulation level right now is at around $60,000, and it's a growing function. So now it's at around 60k, roughly speaking. In the next half of 2026, this could be well close to $65,000 as this regression based fair value catches up to that level. In 2024, this green line was at around 47k. Now in 2026, it's at around 58k. So what matters is not just the raw value of the price, but also its relationship with its historical price and how overextended that price is, or how overvalued or undervalued that price is with respect to its historical price. So the first stop for Bitcoin to be in a major accumulation territory is anytime Bitcoin falls below 60k in the short term. Again, this could well be 65k in, let's say, next half of 2026. So this is the first model. The second model is the time weighted average price model. Rather than looking at one point in time, this looks at all of the pricing days. So all of the days that Bitcoin has traded since 2014, that is every single day since 2014, and creates an average price for that day. And based on that average price, this time weighted average price is created for Bitcoin. This is where Bitcoin has spent its entire life as an asset. Again, I know Bitcoin was released sometime in 2011, 2012, but again, as it started becoming a known entity sometime around in 2014, tracking 12 years worth of daily price action helps inform the time weighted average price with minimal skews. So in the bear market, what you notice is that these risk levels are normalized between 1 and 10, and typically in the bear market, anytime Bitcoin enters risk level 5 or below, that's where accumulation makes the most amount of sense. Right now, the time weighted average price risk is risk level 7 over here, which is again the difference between the price and the time weighted average price is greater than 150%. What I would like to see in the bear market of 2026 is the difference to be lower than 50%. Right now, the time weighted average price is close to $28,000, but you can see it's growing rapidly. So, for example, in 2025, 1 year before now, this time weighted average price was 21,000. Now it has grown to almost 28,000, and it's an exponentially increasing function as the price has spent considerable amount of time above the $27,000 level, and that's why the magnet of the price action pulls the time weighted average price higher. So what I would expect in the later half of 2026, around when typically Bitcoin bottoms, like it bottomed in the last quarter of 2018, the last quarter of 2022, typically last quarter of 2026, that's where Bitcoin could bottom this time around if we go by past price behavior. At that point, the time weighted average price could well be close to $30,000. And if we put a 50% premium on the time weighted average price at the bottom before that accumulation phase starts like it did. So for example, over here, risk level 5 in 2022, in July 2022 was when the difference between the price and the time weighted average price was only 62%. So let's round it off at around 50%. A 50% increment on 30,000 is 15,000. Adding 30,000 and 15,000 gets the Bitcoin price at the bottom close to 45,000. If at that point, if the time weighted average price grows to 32,000, then it instead of 45,000, we get 32,000 plus 16,000, which is 50% of 32,000, and the bottom for Bitcoin is 48k. Nonetheless, at risk level 7, this model, accumulation at this point in the bear market does not make as much sense as it would say perhaps if the risk level has gone to even risk level 6 for that matter makes some sort of a sense. You can see that in the last bear market or in the recovery year of 2023, almost the entirety of 2023 was spent in this risk level 6, which is again not the worst time to DCA. Again, if the DCA window would need to be expanded or need to be across multiple quarters to benefit from the time-based dollar cost averaging rather than only doing a lump sum at the bottom, which no one knows when the bottom could exactly be at any point. Again, one could estimate but not again predict to a dot where the bottom could be. So risk level 6 makes some sort of a sense. Typically risk level 5 and below, again that's where per this model makes the most amount of sense. The opposite of that is this model did identify the elevated risk level again in the bull market, risk level 8, risk level 9. Those were the typical zones in 2024, 2025. We did not get a blow off top risk level 10 in 2025. That's where you can see the risk level 10 was the last time Bitcoin went to that level was in October, November 2021. So risk level 10 without that euphoria's peak in the bull market would mean that again from cycle to cycle one could see that risk level 1 was not in the bear market, was not hit since 2015. Risk level 2 was not hit since 2018. Risk level 3 not hit since 2022, 2023. Perhaps this time around price does not get to risk level 3 or below than that. But again, that is again one risk level lower in terms of the volatility to the downside. This could mean that in 2026 risk level 4 or even like a shallow entry into risk level 3 is where the bottom is for Bitcoin. That's just going by the logic that every single bear market the risk levels kind of diminish to the downside as well as to the upside. So I'm not saying that the price has to go below the time weighted average price or even come to that risk level 2 when the price has only 15 to 20 less than 20% wiggle room with respect to the time weighted average price, or even for that matter 30-35% decrement with respect to the time weighted price premium, which is typically in risk level 3. Risk level 4 is again when the premium is closer to 50% or at that level. So that's why in our calculations we that we discussed in this video is again a 50% premium on that time weighted average price at the bottom with that extension gets the price somewhere close to 45k to 48k at the bottom with respect to the current price trends. If we were to have like a couple of months of non-panic bearish scenario, this is the time series forecasting based model. This is weekly average price of Bitcoin since 2014 and using time series forecasting techniques such as seasonal ARIMA and machine learning techniques such as LSTM models, and using confidence levels models to identify the lower bound, the base case and the bull case for Bitcoin using statistical framework. This model again says that if there is one more month of bearishness, then the bottom for Bitcoin is close to 60k. If 2 months of bear market in the future, it's close to slightly under 59k, and that's where that 59k is where the regression based one standard deviation residual based accumulation zone could catch up to that level in June if we get 2 months of downturn since let's say May and June. Again, timelines, this model does not account for a shorter term rally in the midst of a bear market. So again, the timeline could be shifted. Instead of this downtrend starting in April, this could start in, let's say, mid-May or mid-June for that matter. And then if the downturn starts late, then the downturn gets over later as well. That's why we only forecast 6 months out into the future. The 6 months out future non-panic case in the bear market bottom for Bitcoin is 55k. But with one month of a panic, let's say there is one panicky month in that bottom, then you count again 6 panicky months gets Bitcoin price action down to $40,000 level. But again 6 continuous months of panic in this late into the bear market is kind of unheard of. Again, usually panic lasts for 2 to 3 months, if not less than that. So accounting for 3 months of panic, let's say from here mid-April to mid-May to mid-June, would take that panic bottom for Bitcoin close to $45,000, as we discussed with respect to the time weighted average price model as well. So these are some of the models which can identify the bottom for Bitcoin, but also again a top pattern as well. But we are right now in a more of a bear market territory. So in 2024 2025, this channel focused more on identification of top. Identifying bottom is much easier than identifying tops. So in the bear market, focus is on identifying the tops, which is arguably more important. Identifying the bottom, which is arguably more important than identifying the top, because tops for Bitcoin again have started to become more of a rounded top and a prolonged territory in that topping pattern. Unlike, so for example, in 2017, this was kind of a 1 or 2 week stay at the top and then came crashing down in 2021 2022 time period. Two different distinct instances of first of several months to a quarter, and the second almost a month into that topping pattern. In 2024 2025, this topping pattern lasted above 100k, let's say over here first instance of couple of months, and then starting essentially from May 2025 till almost November 2025, the price was in that topping territory. So identifying the top from now on would be more or less becoming easier than in the historical cycles, where the top was so much of a euphoria based top that identifying that kind of a environment became statistically harder than let's say something which is of a diminished volatility. So how can we identify the Bitcoin peak at this point? If we go by the decay based model and try to extrapolate this 2 standard deviation behavior, right now 137k is that 2 standard deviation ceiling for Bitcoin. If we extrapolate this out, so you see that 137k number over here, using a linear regression based extrapolation from over here, let's say the Bitcoin peak comes sometime in 2028 2029 time period, around that first to second quarter. That's where price of Bitcoin at that peak could be at around $225,000 to $250,000 in the next peak. And you can see the panic bottoms also kind of shift from currently at around 34k. At that point, the panic case would shift to the current price at around $72,000. So today, which the price of today is the panic floor for 2029. So that's the outcome of Bitcoin's cycle to cycle higher highs and higher low trajectory that it has maintained for almost 12 years now. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and check out all of these charts on cryptoweeklies.com. All of them are available for free. No sign-ups or anything required. So hope you enjoyed them as well, and hope you have a nice weekend. Thank you. Bye-bye.